everyone. Hope you're all doing good. So yesterday was our advanced accounting paper. So hope all your those of you who've written that exam, hope all your papers went well. All right. This video is all about a quick analysis of or quick review of the paper that you wrote yesterday. Right? Yes. So we'll be doing a quick review. Will not take too much time. Maybe around 30 to 40 minutes tops is what I'm thinking. Yes. So ideally, I would suggest that this particular video, those of you who are writing your examination, watch it after all your exams is over. Or if at all you feel like, no, I want to watch it now only, try to watch it as soon as possible, maybe at 1 or 1.25 speed, and try to get on to your next paper, which is your law. Okay. All right. So yes, the first part. No, or if you ask me, sir, what is your view on the paper? So overall, I just did a quick review of the paper today. So I've written some comments. I'll go over that with you. So as per my understanding goes, so this is an average level paper. So I think looking at the questions and all, I think it's quite possible, or it's easily, you could say that many students can score a 60 plus in this kind of a paper. Yes. So yes, definitely it is lengthy. You have got some consolidation question, amalgamation questions, preparation of financial statement questions. They're all easy, but it is just that those could be a little time consuming wala question. Yes, if you can manage the time, all right, then I'm pretty sure that most of you should end up getting some good marks in this particular paper. So that's the happy news according to me. Let's see how the final evaluation comes out to. Yes. So without further delay, let's get started with our MCQs. We know that now MCQs are constitute around 30 marks, right? So let's look into the MCQ part of it. So Mr. Vikram, case scenario 1. So whenever, as I told you in class, sir, don't blindly read off the MCQ questions in examination. First look at the requirement. But it could be possible that certain questions are pretty straightforward in nature, where you don't have to worry too much about the case study only. You can directly select the answer then and there itself. You get straight away theory. So what we'll do is first we will review the requirement. So they ask you to value closing stock of raw material and closing stock of finished goods. That's requirement number 1. Then some self-constructed asset is there. They're asking you to value that. Then they're asking AS16 ka borrowing cost, how much will be capitalized and how much will go off to P&L. Then they're asking the carrying amount of investment as required as per the requirements of accounting standard 13. So multiple standards they've combined. AS2, 10, 16, 13 has been collated, and they made a case study and given this particular question. And that's how you can expect the case study also. It's not going to be from one chapter. They're going to collate many chapters and make these sort of case studies. So now that we have a fair understanding of what is the requirement, we can run through what has been asked in this particular case. So one, Mr. Vikram, he has taken a loan of 6 lakh and the loan carries 10% interest rate. Guys, I'm not discussing I'm not teaching you these case studies. I'm doing a quick review. So keeping the time in mind. So my pace at which I'm going to speak is going to be a lot faster compared to our regular class, because the intention is to complete it off as soon as possible. So we have taken a loan ka interest rate is 10%, but more importantly, loan ka date is 1st August. Your year begins on 1st April, but you have taken the loan from 1st August. Okay. So that means August, September, October, November, December, January, February, March. The loan is in existence in the current year only for 8 months. Keep that in mind. So they purchased a loan to purchase a raw material. Okay, that's the first thing. Normally we take a loan to buy qualifying asset. Here they have told we have taken a loan to purchase raw material. They purchased 4,000 units of raw material, and the cost of each unit of raw material is 125. Replacement cost is given to be 100. Sir, we know AS2 ka concept. Raw material ka valuation is based on finished goods. If finished goods is valued at cost, raw material also will be valued at cost. If finished goods, however, is valued below cost, that is at net realizable value, raw material usually will get valued at replacement cost. Yes, no? Basically, you have to value raw material at cost or replacement cost, whichever is lower. But in majority of the cases, replacement cost only will be lower. Hence, if finished goods is valued at at net realizable value, raw material automatically gets valued at replacement cost itself. So the replacement cost, they've given it as 100. So I've just jotted down that particular data here. Cost is 125, replacement cost is 100. Okay. Then there is a labor and other charges which you have incurred as well. To produce the goods, obviously you'll have to incur other cost as well. That is 1 lakh to produce 1,000 units of finished goods. So 1 lakh is the total cost for 1,000 units. For 1 unit, how much is it? 100 rupees per unit. Okay. All right. Totally 1,000 units of finished goods are produced. That's they told here also. It's given repetitive data. And for every unit of finished goods, we need 2 units of raw material. To produce 1 unit of finished goods, we need 2 units of raw material. That means to produce 1,000 units of finished goods, we need 2,000 units of twice. That is 2,000 units of raw material. The NRV of finished goods is 300 rupees is what they are saying. All finished goods produced are lying as stock. You produce 1000, entire things are there as closing stock. So closing stock of finished goods is 1000 units. Okay. So there is no opening stock they are saying. All right. So let's stop there, or maybe we can quickly review this as well. Vikram used 1500 units of raw material to construct an asset. Oh, sir, they use raw material to produce finished goods, as well as they've used raw material to construct another PP, property, plant and equipment. And that property, plant and equipment is a qualifying asset. Okay, so totally 4,000 units of raw material you purchased. In that, some got used into finished goods, some got used into asset construction. Okay, we'll see that. Labor and overhead charges for construction. This is all asset ka data. This is about loan ka data they have given. That means as far as the valuation of inventory goes, the first two paras are good enough for us. I think we can go ahead and value them. Okay, now first they've asked the raw material ka valuation. Raw material ka valuation is based on finished goods. So first let's do the valuation of finished goods. Okay, sir, to produce 1 unit of finished goods, what and all cost you require? To produce 1 unit of finished goods, we need 2 units of raw material. Correct? No? For 1 unit of finished goods, we need 2 units of raw material. So 2 units of raw material. And what is each unit ka raw material cost? 125. Okay. That means what is the raw material cost that will get absorbed into finished goods? For 1 unit of finished goods, you need 2 units of raw material, and each unit of raw material will cost 125. So the raw material cost required for finished goods production is 250 per unit. All these are on a per unit basis. Yes, this is about your material. Is material cost only cost we'll consider? No, there are other costs as well, like your labor and all they've given. Yes, labor. What is the labor cost per unit? Labor cost we already found out is 100 rupees per unit. Yes, so 1 unit of finished goods require 100 rupees of labor hours. That we have found out. We'll add it up here. Any other cost is given for finished goods? No, no variable production overheads or fixed production overhead. That data they have left it off. So these are the only 2 costs. So the total cost of the finished goods, total cost to produce 1 unit of finished goods is 350. Right? Do you know the net realizable value of the finished goods? Yes, directly given to us is 300. Sir, the cost is 350, NRV is 300. So finished goods obviously will get valued at what, sir? 300 rupees per unit. And how many units of finished goods we have? They said we produced totally 1000 units of finished goods. They said all the finished goods are lying unsold. That means entire 1000 is closing stock. 1 unit ka value is 300, so 1000 units ka value will be 3 lakh. So this is the closing stock valuation of finished goods. And the funda is, since the finished goods got valued at net realizable value, raw material will get valued at cost or replacement cost, whichever is lower. All right. Obviously here in the raw material case, replacement cost only will be lower. Check. Cost of raw material is 125, replacement cost is 100, which is lower, 100. That means the raw material will automatically get valued at replacement cost. Yes. Okay. Now we know the value. Each raw material will get valued at 100 rupees per unit. All we need to do is how many units of raw material is there or lying unsold is what we need to find out. Okay. How much is that? So totally how many units of raw material did you purchase? As per the data they told, we purchased 4,000 units. All right. Entire 4,000 got utilized to produce finished goods? No. How many units of finished goods did you produce? 1,000. To produce 1 unit of finished goods, you need 2 units of raw material. To produce 1,000 units of finished goods, how much raw material you would require? Twice of that, which is 2,000. So out of 4,000, 2,000 got absorbed into finished goods production. Right? That's all. No. Raw material was used to construct some asset also. Right? That's what they said. How many units got utilized for constructing the asset? 1,500. So that means 1,500 went for asset construction. So how much is remaining? So if you eliminate all this, the closing stock of raw material in units is 500. And each unit of raw material will get valued at replacement cost of 100. 1 unit ka value is 100. For 500 units, the value will be 50,000. So 50,000 and 1 lakh is the answer. According to me, B for Bengaluru is the right option for this particular question. Okay. Second is, what is the cost of self-constructed asset is what they're asking. Okay. Let's see what and all cost went in. One, we know that we use raw material, right? And raw material ka we already know. Excuse me, or maybe we'll read off this para. Vikram used 1,500 units of raw material to construct the asset. Self-constructed asset ka principle is same, no? Right? So whatever is the DAC, directly attributable cost required for construction, you can go on capitalizing. Is raw material required to construct this PP or whatever? Yes. That means, is it DAC? Yes. Can you add? Yes. Okay. First is raw material. Then we have labor and overhead charges incurred for construction. So this is also DAC. Can we add? Yes, we can add 90,000. Vikram also paid 15,000 for installation. Can we add installation charges? Yes, this also can be added. So only 3 components, right? Raw material, labor and installation charges. How many units of raw material got used for this? 1,500. Yes. And each unit of raw material cost is how much? 125. So 1,500 units got utilized and 1 unit of raw material will cost 125. So the cost of raw material which will be added to the cost of PP is 187,500. That is one. Then labor and installation charges straight away you can add. Comfortable, sir? Okay. But they told in the problem that this is a qualifying asset. This is a qualifying asset. Yes, no. That means, sir, you bought this raw material, no? Right? Did you buy it out of your own money or you took a loan? Loan, right? So indirectly, since this qualifying asset is taking a lot of time, the interest also will get capitalized. The interest capitalization adjustment also will be there over here, but that you need to be a little careful of. Okay. Now we already know how much is the loan amount. 6 lakh. What is the interest rate? 10%. Was the loan there for a whole year? No, it was there only from August to end of the year, which is 8 months. Hence 8 by 12. Right, sir? Okay. Sir, the 6 lakh loan was for the entire raw material. No? Correct. All right. In fact, basically, you'll have to do a proration over here. Sir, entire loan got utilized for this construction. No. Sir, we are trying to find out how much borrowing cost can be added to this particular asset. There's a PP probably, right? How much you can capitalize for this particular asset, right? Okay. Now, excuse me. Now, you purchased raw material out of 6 lakh loan. Entire raw material got utilized for this asset only. No. Only 187,500 worth of raw material only got absorbed over here. Yes, no. That means what, sir? So this portion, what do you compute? No, so this whatever if you calculate, I don't have this number with me. This is for what, sir? 6 lakh rupees, right? The entire 6 lakh was not utilized for this particular asset. Out of the 6 lakh, only 187,500 was the raw material purchased for this particular asset. Hence, you need to prorate. Okay, so this is the total interest for 6 lakh loan, but only 187,500 worth of raw material was used for this asset. So prorate that accordingly. You will get the interest to be capitalized as 12,500. So add all this, you will get the total amount to be capitalized, which is 3,05,000. Option number C for Chennai is the right answer for this. So this is one maybe I feel majority students would have missed out there. But that's all right. Overall in MCQ questions, 4 or 5 MCQ questions probably was trickier. Maybe you would have got that wrong. That's all right. But about 7 to 8 MCQ questions were very, very straightforward. That means easily 16 to 18 marks minimum, swaha only. Aram say you can collect it. Okay. So that way even MCQ part of this paper also overall was okay. Right. Only except that 4 or 5 questions, this tricky adjustment, everything else looked okay to me. All right. Next, they are asking, sir, how much interest cost will be capitalized and how much will go to P&L? First, calculate the total interest. How much is the total interest? 6 lakh is the loan. Interest rate is 10%. We took the loan on August. So only 8 months interest we have to pay. That is how much? 40,000. Sir, in 40,000, 12,500 got capitalized. That means balance interest will go where? P&L account, which is how much? 27,500. So 12,500 and 27,500 is the right option, which is there in option number A. A for alpha. So that's the right option here. Okay, then they're talking about investment. Let's come back to the para and read investment data. Mr. Vikram, he used balance loan proceeds of 1 lakh to invest in equity shares. Okay, so totally he took 6 lakhs loan. Okay, some portion he has used to buy raw material. Some portion is probably remaining. Check. He bought raw material worth 4,000. No, and what is the cost he paid for each raw material? 125. So 4 into 125 is 5 lakh, right? So out of the 6 lakh loan, 5 lakh loan was utilized to buy raw materials. Balance is still there, no, which is how much? 1 lakh. That's what they're saying over here. So Vikram used the balance of loan proceeds of 1 lakh to invest in equity shares. So he bought some equity shares. He purchased 9,000 equity shares, face value is 10 for 1 lakh rupees. Okay, that's what he has utilized. On 25th March 2024, just before the year ending, about 5-6 days before the current year ends, he has purchased some investment. Okay. The other company, P Limited, because we purchased the shares of P Limited, right? That P Limited paid a dividend of 20%, right? When did they pay? On 30th March. Were we already the shareholder? Yes, sir. We bought the shares on 25th March. Sir, 5 days before dividend declaration, we bought the shares, right? So that means, will we receive dividend? Yes. Logically, should we receive the dividend? No, because you will pay profit. You will pay this dividend out of what profits? Post-acquisition profit or pre-acquisition profit? Pre-acquisition, yes or no? Because in 5 days, you can't make so much profit that you can pay dividend. Yes, correct. That means all this dividend would have declared out of pre-acquisition profit. So what sort of a dividend is this? Sir, any dividend paid out of pre-acquisition profit is a pre-acquisition dividend. And what does AS 13 say? Pre-acquisition dividend should be reduced from cost of investment. They're asking the value of investment. No, you bought the investment for 1 lakh. You received dividend, right? Dividend is always calculated on face value. 90,000 is the total face value and the dividend rate is 20%. So dividend amount to be reduced from cost of investment is 18,000. So the carrying amount of the investment at the end of the year become 82,000. So the last option, which is 82,000, is the treatment. And they're asked, what will you do for dividend? Dividend should be reduced from cost of investment. So D for Delhi is the right answer. Okay, this is the pace you need to maintain in the examination to solve the MCQ question. Okay, all right. When you are understanding, when you are studying, you can take it slow, but in the examination, you should have it. Okay, don't be like, I'll write every data, I'll write every component. No. Okay, whatever is the necessary data, only bring that in. Don't waste your time bringing too many things. Okay, because the time is of essence, people. Okay, this is about case study number 1. I would rate probably case number 1 was probably a little tricky. There is a scope that some of them would have not understood, because I do understand that knowing the concept is one thing, but on the examination day, at that particular point of time, to remember all the concepts together, not to forget something, that too in the MCQ pattern, could be a little challenging. So few questions can go here and there. So don't worry too much about it, because to clear the examination, you don't need 100 on 100, as I keep telling. All right. To clear the examination, even with a rank, exemption is good enough. Yes, 60, 70 marks is very good marks in our examination paper. I'm not asking you to aim low, but by chance, if the things paper have worked out like a little off, that's all right. Even that 50, 60 marks is still good enough for you to clear that entire group. So have the confidence. Do not skip any attempt. I've seen many students do first paper little bit off means they'll skip the other papers. Please don't do that. Concentrate on the next paper, no matter how you have written this particular paper. Okay, case study number 2. This is very straightforward. K Limited sold goods 22 lakh worth to Rami, but at the request of the buyer, these goods were delivered. So that means the goods are delivered on that date. No, delivery is delayed at buyer's request. We have done so many questions on this in AS9. If delivery is delayed at buyer's request, will we delay the revenue recognition or immediately? Immediately. So 22 lakh revenue you can recognize immediately. That is one. Next, K Limited also sold 2 lakh goods on an approval basis. We know this, no? Goods sold on approval basis, immediately you will recognize the revenue? No. Either the goods should get approved or buyer should does any action amounting to sale, like few parameters have to come in. So here we'll see, we sold totally 2 lakh worth of goods on approval basis on 1st January. Period of approval is 3 months. Buyer sent disapproval, not approval. Okay. Usually in the question we see approval data. Here they've given disapproval, meaning buyer has rejected 25%. He's saying, I don't want this. Okay. All right. And approval for 50% is received till 31st March. I am not even bothered about this data. Why, sir? Sir, I sent the goods on 1st January. Time limit is March. So January, February, March. By 31st March, the time has got lapsed. If time has got lapsed, whether the customer approves or whatever, we still go ahead and recognize the revenue. Yes. Don't recognize 100% of revenue. 25% is disapproved. That means how much on balance goods, either acceptance or non-acceptance becomes irrelevant because time has got lapsed. So 75%, 2 lakh 75%, which is 1,50,000, you can recognize the revenue. On the above data, 22 lakh you can recognize. On this, you can recognize 1.5. Total is 23.5 lakh. That's the first requirement. In fact, read the requirement first and then do the question here, people. But that's what they ask. What is the total amount to be recognized, which is 23.5 lakh. What is the second requirement? They're asking as per AS 29, what do you need to do? Maybe some provision, contingent liability, wala they talking about. Then they're asking as per accounting standard 4, what we need to do. Some provision they've given. Okay, we'll read the data now. I mean the case study now. Ravi Kumar has commenced legal action against K Limited. Okay, sir, we are K Limited here. Some other customer have filed a case against us. So it's not an inflow scenario, it's an outflow scenario. Keep this in mind. So either what? Contingent liability will come or provision will come. Yes, unless the obligation is remote, in which case we can ignore. We don't have to do anything. Yes. So check here. So some customer has filed a legal case against us for supply of faulty goods, it seems. Okay. The lawyers of our company, they advise that it is not remote. It's not, they're not saying remote. They're using the word not remote. If it is not remote means what, sir? We know the order. First, it is virtually certain, right? In fact, our chart book also we have discussed. Virtually certain, then it becomes probable, then it is possible, then it is what, sir? Remote. If they are saying this is not remote, immediately next to that, above that is what? Possible. That means indirectly they're saying what? This is a possible obligation. It's not a probable obligation, it's a possible obligation. For possible obligation, do we create provision or contingent liability? Contingent liability. This is as per our lawyer's opinion. So that means this question is hinting towards contingent liability. Okay. The lawyers of K have advised that it is not remote that resources may be required to settle the claim. The outflow is possible is what the lawyer is saying. Legal cost to be incurred irrespective of the outcome is 45,000. Lawyer is playing safe. No matter whether you win the case or case damaro, my fees to pakka you have to pay. That means for 45,000 obligation is pakka only. Alright, fair enough. That means you have to create what? You have to make a provision for 45,000. That's certain. Right? Settlement amount of the claim is required to be paid as 5 lakh. If by chance we lose the case, we have to pay to the customer who someone has filed a case against us. No, Ravi Kumar. To that guy we have to pay 5 lakh. This obligation is what? Possible. Possible obligation means we create provision. So we disclose contingent liability. That one we need to select. So 45,000 provision, contingent liability disclosure of 5 lakh is the right answer. Okay, yes. Next, Sheetal Enterprise, probably different one they've given, or maybe each thing, or no, same only. Sheetal Enterprise, a trade receivable of K Limited. Okay, we have one debtor called Sheetal Enterprise. They have suffered a heavy loss. Okay, maybe adjusting, non-adjusting event ka drama this is. They've suffered a huge loss due to earthquake that occurred on 30th March. Sir, our year is ending on 31st March. Usually we see this fire, flood, earthquake wala problem. They tell it occurred after year ending. That means in all our maximum problem, we have written this as non-adjusting event because it happened after year ending. But here check, they modified. So in the current year itself, current year ends on 31st March. One day before that only earthquake has occurred. Okay, heavy loss, right? That means what? Condition is existing on the balance sheet date. Correct? No, that means this is what? This is an adjusting event. Yes, the loss was not covered by any insurance policy. The other enterprise, Sheetal, no, they're pretty dumb. They have not taken any insurance policy. That means the entire trade receivable for us is what? Tirupati toss only. Goinda. On 1st April 2024, Sheetal has become bankruptcy. They filed bankrupt. The balance sheet or the balance due from Sheetal Enterprise is 75,000. Okay. K Limited makes a provision at 5%. Usually on provision for doubtful debts, they are saying we make it at 5%. In this 5% is relevant. No, sir. One condition is existing. So there's an adjusting event, right? And that person has become bankrupt means we need to make provision for doubtful debts for how much value? 75,000. So whatever answer that has 75,000, you need to select that. So it's an adjusting event. 75,000, you should make a provision. So A for alpha is the right answer here. Okay. All right. Anything else they've given? No. This particular case study is also done. This was very, very straightforward. Correct? No. Okay. Next, they have given some individual case studies. So let's go run over them. P Limited has 60% voting in Q. Q has 20% in R. So the graph is like this. P has 60% in Q. Q has 20% in R. And also P directly enjoys voting power of 14% in R. P also has 14% in R. That's the pictorial representation of the shareholding. R Limited is a listed company and regularly supplies goods to P Limited. The management of R Limited has not disclosed the relationship with P Limited. So there's a question on AS 18, related party disclosure. Right now, first of all, if one company is able to control or have significant influence, right, they become related party, right? Associate company, subsidiary company, joint venture company, all these are related parties, right? So if you're doing any transaction, you should compulsorily disclose. Here they are saying they have not disclosed. While preparing financial statements, which entity should disclose as the related parties? There's what they're asking. So what and all is a related party is what they're asking. So P controls Q. Is P and Q? For P Limited, they're asking who is a related party. Since P controls Q, is Q a related party? Yes. How about P and R? So P has only 14%. No, sir, we don't take that. We have already done this in AS 23 question. Same setup, right? To find out if the graph is like this, we have a subsidiary has some shareholding in another company, and we also have some direct holding in another company. What do we have to do? To find out whether R Limited is an associate, we take direct holding as well as indirect holding. P holds 14% direct holding. Similarly, Q has some shares. No, that we call it as indirect holding. How much indirect holding Q has in R? 20%. That means the total holding is how much? 34%. For you to get significant influence, the percentage we look for is 20% and above. Here we have 34. So is P and R a related party? R is an associate. So is P and R a related party? Yes. That means Q and R Limited both are related party. Disclosures needs to be given. So C for Chennai is the right answer for this particular question. Next, this is same study material question AS 19 ka. We have done this question. It's there in our book. It's there in ICA material also. Ditto. This is a machinery was given on 3 years lease by a dealer of machinery for an equal annual lease rental to yield a 20% margin on the cost of machinery. We have to lease it in such a way that we get 20% margin on the cost. The cost of machinery is 3 lakh. That means we want to recover how much? 3,60,000. That's what indirectly they're saying. Economic life of the machinery is 5 years, but we'll not give it for 5 years. We'll give it only for 3 years. Estimated output they've given for 5 years is like this. So for all the 5 years, they've given the output. We know how to do this, no? You have given the asset only for lease only for 3 years. Add 3 years output. If you add it, you will get 1,50,000. So 3,60,000 is a recoverable value for 5 years, right? Because asset can you last for how many years? 5 years. But have you leased it for 5 years or only 3? Right. That means what? 3,60,000 is for 5 years output, which is 3 lakh units. But we have leased it only for 3 years. For 3 years, how much is output? If you add all this, you'll get 1,50,000 units. How did I get 3 lakh? Adding all the 5 years ka output. If you add, you'll get 3 lakh units. So prorate that will be the total lease rental. because we have taken 150. No, 150 is not for 1 year, it's for 3 years. So that means totally what, sir? 1,80,000 we will recover by leasing this asset for 3 years. But they did not ask the total lease rental for 3 years. They asked you what is your annual lease rental, meaning every year how much is lease rental. Total lease rental is 180. We have leased it for 3 years. I mean, lease rental per annum or annual lease rental is 60,000. So B for Bengaluru is the right option here. That's it. Okay. Question number 10, also very straightforward question. This is on AS20. We have to calculate weighted average number of equity shares here. That's all. A Limited has 1,50,000 shares outstanding on 1st April. Great. Additionally, 50,000 shares was issued on 1st November. 32,000 shares was bought back. Calculate weighted average number of shares. So we can calculate under individual approach, cumulative approach. Both I've shown you in class. Whatever floats your boat, whatever you are comfortable with, you can do that. If you're doing individually, 1,50,000 was there for entire 12 months. So 12 by 12 is a weightage. This 50,000 came only from 1st November. November, December, January, February, March. That means only 5 months. So 5 by 12. But when you do the buyback, number of shares will reduce. Hence deduction. How many shares did you buy back? 32,000. When? February. But year ends on March. So February, March. How many months? 2 months. So 2 by 12. So deduct this. You'll get the answer to be 165,500. So that is the right answer for this particular case study. Again, a very 2 marks easily swaha. Yes. Okay. Case scenario number 3. Okay. All right. So they've given some financial statement. Again, before I said, no, just look at the requirement. That will be easier. They're asking you cash flow from operating activity, cash flow from investing activity, cash and cash equivalent they're asking on 1st April. And they're asking you what is the balance of equity share capital after internal reconstruction. Maybe they've given some internal reconstruction and some cash flow activity. We need to keep both in mind and accordingly figure out these. Okay. All right. So now with this in mind, let's read the data. They've given basic balance sheet that, and moreover here, people, they've not given 2 years balance sheet. They've only given balance sheet for 1 year. Okay. Keep that in mind. That is one. Then on 31st March 2023, this balance sheet is on 31st March. On the same day, this particular company, they decide to reconstruct the company. They're doing some internal reconstruction. 9% debentures will be settled by issuing 15,000 equity shares of 10 each. Debenture holders we are settling by giving equity shares. We know the entry for this, no? They're not asking all that. Don't go into those lines of thinking entry. That's the reason first you should read the requirement. They only asked cash flow related 3 question and they asked the share capital related data. Okay, right? So everything you don't have to worry about. I mean, go into internal reconstruction ka full discussion or full recap. Don't play in your mind. Equity shareholders will give up 40% of their capital. So 40% they are ready to sacrifice. Great. Again, all these are non-cash because they also ask cash flow item. So here debenture is being settled by giving equity shares means cash is not coming in, cash is not going out. So non-cash item or non-cash transaction. Here equity shareholders are sacrificing, right? And in exchange, they will get new debentures of 4 lakh it seems. Okay, you're not paying any cash, right? 40% they will sacrifice, for 60% they will take new debentures. Again, a non-cash transaction. P&L will be written off. That usually happens in your internal reconstruction, right? Okay, that's again a non-cash item. Equity shares issued for 1 lakh rupees. So you issued equity shares and raised 1 lakh money. So there's a financing activity. Under financing activity, you'll have to add this. In addition to the above, on the very next day, 1st April, they've given extra information. Interest received on advance to supplier. Sir, anything to do with suppliers, customer and all is an operating activity. We have already seen this. This is interest received. So under operating activity, you will add. Taxation liability comes under operating only. So under operating activity, tax paid of 14,000, you will minus. Debtor of 40,000 is installment and only 40% of his dues are recovered. Money received from debtors is what? Again, an operating activity. Yes or no? Sir, this is direct method. Don't do indirect method. Okay. All right. So because all the data directly given to you in the question. So 40,000 ka 40% is 16,000. 16,000 is the money received from debtors. You have to show under operating activity. Dividend received on investment. Investing activity at 1 per share. How many shares we had? That they've given in balance sheet. Check. We had 10,000 shares. On 1 share, 1 rupee dividend. On 10,000 shares, the dividend will be 10,000 rupees. Investing activity plus. Part of plant and machinery is sold at a loss of 3,000. Loss amount is 3,000, not sale value. Loss is 3,000. Book value of the asset is 15. That means the sale value is 15 minus 3, which is 12,000. You have sold this asset for 12,000. This is a PPE sold, no? All property, plant and equipment, intangible asset, investment sold and on will come under investing activity as a positive number. So 12,000 plus. Okay, all the data we have read. How much is cash flow from operating activity? They're saying wherever we have written add. One, we have 3,000 inflow, add that. Then we have debtors received 16,000, 40,000 ka 40%, which is 16,000, add that. Then we have taxation liability paid of 14,000, reduce that. If you do that, you will get 5,000 rupees. So B for Bengaluru is the answer here. Next requirement is what is the cash flow from investing activity? 2 activities we have. No, one is 10,000 dividend received and asset sold 12,000. So if you add these two, that is 22,000. So that's the right answer for this. Okay, next MCQ. What is the amount of closing cash and cash equivalents on 1st April? They're not asking at the end of the year. Okay, they've given transaction only from 31st March to 1st April, only 2 days, right? They're asking you to find out. They've given you the cash balance. This cash and cash equivalent balance they have given. The 1st April ka cash and cash equivalent balance they are asking. So only 2 days ka transaction you need to take. That we already know. No. Takes. What was the cash balance initially? 65,500. That is there in the balance sheet. Start with that. Then where and all you have the cash inflow or outflow, go on adding or reducing. One, you issued shares 1 lakh rupees. So add that. This is 1 lakh shares issued where here. That is done. Next, you received some advance 3,000 plus 3,000. You paid taxation liability 14,000. So plus 3,000 minus 14,000. Do it. Then debtors received 16,000 add, interest received 10,000 add, book value of assets. So I mean the investment sale value of the investment is 12,000. So 16, 10 and 12 also you add off. That's what we have added. If you do that, finally you will get the answer to be 1,92,500. Quite simple. This also, if you had given it a little thought, I'm sure that you would have not done any mistakes here as well. Okay. Next, balance in the share capital. They're asking after doing internal reconstruction. Okay. First, what was the share capital before all this activity? As per the question ka balance sheet, share capital was 5 lakhs. So take that number. Then what and all happened? You'll have to go from the beginning again. Here, did you issue any equity shares for debenture holders? Yes. How many? 15,000. Each ka value 10. So 15,000 into 10 is 1,50,000. So if you are issuing equity shares, share capital will increase. So add 1.5 lakh. Then did the existing equity shareholders surrender? Yeah, 40% they surrendered. How much share capital they had? 5 lakh. In that 5 lakh, 40% the sacrifice means 40% of 5 lakh is 2 lakh. 2 lakh share capital will reduce. So reduce that. Then that's all. No, something else was also there. No, equity shares we issued for 1 lakh rupees. We raised money by issuing equity shares 1 lakh. So again, equity share capital will increase by 1 lakh. If you add all this, you'll get 5,50,000. That's the answer for this particular MCQ. Okay, G. Yes. Last, this is pretty straightforward. Fixed asset held for sale. Sir, if any fixed asset, if it is held for sale, will we still show under non-current asset? No. They're asking where will you classify this in balance sheet? These assets are shown as current asset in our balance sheet. If any fixed asset or intangible asset, if it is held for sale, we show it under current assets. Yes, we have discussed this. So that's the answer. This is a very, very straightforward question. So that's all about the MCQ questions, sir. If you see majority of them, in about 15 questions, maybe about 4 to 5 questions, you could say, maybe tricky. That means about 9 to 10 question was straightforward, no, sir. So in 18 to 20 marks, aram se you could have scored. And if you look at the time, we have roughly taken about 30 minutes now, right? So you get almost 1 hour, right? That was the instruction says. You get about 1 hour to solve these MCQ questions, correct, people? But ideally, what you should do in the paper also, maybe keep this in mind for your further papers. Okay, try to answer the MCQ question as soon as possible so that you can utilize this time for descriptive paper. Okay, so if MCQ is pretty straightforward, means descriptive could be little tricky or they could be lengthier. So if you are able to save some time here, by chance, let's say here 30, if not 30, at least if you finish this paper MCQ portion within 40 minutes, means 20 minutes extra you will get to solve the remaining 70 question, which is required. Otherwise, if you already use 1 hour for these sort of MCQ question, answering entire 70 marks of descriptive paper within 2 hours is very, very challenging. Especially we have seen the pattern that they are asking full question on amalgamation, full question on consolidation, full question on preparation of financial statements. All these are not tough, but they will take time. Your writing speed has to be extremely good. Okay, so when you're thinking so fast, when you're writing so fast, a lot of silly mistakes happen. So my suggestion is try to save as much as time as possible from MCQ and try to use it for your descriptive paper. Okay, this is about MCQ. Now we'll quickly review the descriptive part. Descriptive part though, you should have a big smile on your face. Almost majority of the questions was from our material. When I say our material, even I have made my material keeping our mother body ka material as well, which is ICI. So majority of the questions you could say are from ICI study material only. Okay, just that they have combined 2-3 questions and made a question. So it's nothing as such a new adjustment according to me. All right, about you could say 45 to around 35 to 40 marks to ditto from study. 40 to 50 marks you could say roughly are from study material only. Okay, so we'll run through. So this question, if you just check straight away, it is there in AS26. Amortization they are asking. That's all. You bought an asset for 3.4 lakh. This is the benefit ratio, cash flow. In this particular ratio, you need to calculate amortization. I think they've asked amortization for second year or something. All right, so that's what you need to calculate. That is again pretty straightforward. This question is also straight away there in study material. They are saying amortization company has not done. So again, same question was there in our material and ICA material. Ditto. Amortization you have to charge every year. From the time asset is ready to use, you should start amortization. If you don't do it, then it's a wrong. Right? That's what you just need to calculate. For this 4 marks. Ditto that. Okay, next, Pandora. This is an AS15 wala question. Same question is there in ICA material and our material also, but one change probably here which majority of the students I feel would have missed out is the interest. Sir, in the question ICA material and in our material, the interest we have calculated on a half yearly compounding basis. Half yearly compounding basis. Here the compounding is on annual basis. Maybe in Josh May some students would have overlooked this. Okay, so that is one. That's the only extra thing you need to keep in mind. And here the dates are also usually benefits paid and contribution received dates are same. Here they are different. So here, since the compounding is happening on an annual basis, you need to prorate accordingly here from 30th November to end of the month. December, January, February, March. I think you have to prorate it here by 4 by 12 and here you need to take 6 by 12. That wala adjustment you need to do for this particular question. Other than that, straightforward. But that's okay. Okay, even if you missed out this, it's alright. It happens. So don't worry. As I keep telling you in class, one or two questions will be a little tricky or some adjustment they would have given which we would have missed. So even if you have done some mistakes in here, absolutely no issues. Other than this, many questions were very straightforward. Full swaha you can do in that. Okay. Delta is working on 3 different projects. Sir, this is AS22 ka ditto study material question. Okay, some revenue recognition. Here we are recognizing in books we are doing percentage completion method. For income tax we are doing under completed contract method. So there will be a difference where you need to book DTA, DTL. Same question we have solved in class also. Maybe same value, I don't know, but just the value could have changed, but concept is ditto. Yes, this you can refer to ICA study material or our material, you will get the solution. This question also, sir, full copy paste from study material only. Yes, if you see, same question is there. Same suspense, if you remember, land was revalued, blah, all that adjustment, same drama. But the only adjustment I saw was different over here is they added bonus issue over here. Okay. So, sir, when the company issues bonus shares, what will happen? Equity share capital will increase, reserves and surplus will reduce. Which reserve? Either CRR or security premium or free reserve. Alright. So those you have to reduce and equity share capital you need to increase because sir they've already not done that. No, they told over here no entry relating to bonus has been made. So this effect you need to give it into your financial statement. But overall it's still tally because share capital will increase by the same amount, reserves and surplus will reduce by the same amount. This is the only extra fitting the way I saw. Rest everything, every adjustment ditto as we have solved in class. Same question, same adjustment. Okay, so you should be able to manage this also. But yes, managing this sort of questions because they have asked you to prepare P&L and balance sheet. So preparing both within that stipulated time of maybe 30-35 minutes is definitely a challenging task, which only way to sort out that is to write more mock papers, to time how much time you're taking and try to work upon it. So that's the only way as a student you can kind of catch up with the time. Conceptually, yes, either the paper will be tricky, sir, or it will be lengthy. This is expected. 1 or 2 papers, in fact, will be definitely on the lengthier side. Okay, next question also, same question is there again in our material, ICI material, also ditto, same. This is a direct method wala, I think cash flow statement they have asked is what, I mean, that's the requirement. If you can find the same question there, I don't think so you need my help on this question. So I'm doing a quick review. So only those things which I feel is little different, I'll do a quick discussion. If it is a repetitive question, you can always refer back to our material or ICI material and you should be able to get it. Okay, or probably one thing over here is the dividend distribution tax. So ideally they should have not given this because DDT is anyway abolished. Okay, but anyways, but they also told dividend distribution tax. As we discussed in class, sir, tax, no sir. Generally, if they don't give any information, tax we show under operating cash flow. But however, if further information is given, tax can be classified anywhere. So here on the dividend, okay, we have to pay a dividend distribution tax. All right. Since a dividend, I think this is a dividend paid, no? Because they said dividend distribution tax paid. So dividend paid is what activity? Financing activity. So dividend distribution tax also paid will be as a shown under financing activity only as an outflow, meaning as a negative. This is one new adjustment or an extra adjustment you could say. All right. So other than that, pretty much ditto adjustment. This buyback, though, I think we'll not even talk about this. Yeah, almost every time the same question comes. How much maximum possible buyback? I think last attempt or one before that, I think they asked it as an MCQ question. Okay, now it's come as a pretty straightforward question. Okay, maximum permissible buyback. 3 tests you have to do. No, resource test, number of shares test, share outstanding test, resource test, and debt equity test. In that debt equity test is what you need to kind of keep in mind, right? All right. So again, this is also pretty straightforward. Nothing new. So if you just check so far whatever we have done, everything is more or less from the material itself, nothing new, right? Correct? No. All right, next comes your amalgamation question. So nice and well limited. Here I think again one mistake probably students could have overlooked. I wouldn't say mistake, probably an overlooking here is, sir, well limited is a loss making company. Okay, and in one of the adjustments of this particular question, they gave, maybe one more problem of this question is, look at the length of the question. They almost gave 2 page ka balance sheet only. Okay, then third page also they've given notes to accounts ka description. So almost 3 page ka question only they've given off. So by the time you read the question, only 5-10 minutes will be gone. Okay, so yeah, so it is expected that, you can understand the challenge with respect to managing time in CA exams. Yes. Okay, so the point I want to draw your attention to is, bank agreed to waive off loan of 270 of Well Limited is what they're saying. Sir, Well Limited is a loss making company and they've agreed to waive off loan, means indirectly they're talking about internal reconstruction. So here it is what, sir? Amalgamation and internal reconstruction, because they told in the question that NICE absorbs Well Limited and Well is making a loss, and there is some transaction like waive off and all. So first you will have to probably give your internal reconstruction guy effect. You know this, no? Right? If any loan is waive off, that means the balance will go off to capital reduction. Using that capital reduction, P&L debit balance we need to write off. After that also, if balance is there, transfer to capital reserve. That particular adjustment, I feel students would have overlooked. I don't know if you have got it. If you have done it, that is great. They should have actually specified this, because just because for one transaction, I kind of, if you missed also, I kind of sympathize with you on that. The reason is, sir, with one transaction, it's very difficult to tell that whether the company has done really an internal reconstruction, right? Because in under normal way also, a loan waiver could happen. Right. So I think in this particular question, I say should have given a little more specific data that Well should have done an internal reconstruction according to me. But looking at the data, I feel this is an AS14 and internal reconstruction wala combination question. One such question we had done in class also. A similar question is this. Other than that, pretty much the adjustment, if you just check, everything is mutual owings, the stock reserves, all that is ditto. Okay, PC is also directly given over here. 5 equity shares for 3 shares held. So this is one part of your PC. Debentures, whatever you pay is not PC, because PC means what you pay to the owners. Then preference shareholders are paid at 10% discount by the issue of new preference shares. So this is also PC. So if you add these two, you'll get the PC portion straight away given. So you don't have to go for any net asset method. So it's straight away called out. So PC portion is also clear. And then they've just asked the journal entry and balance sheet, sir. So this is also manageable. Only the crux is the time management. Okay, next is, I think this is the consolidation. I think this is a good question this time. Okay, it looks like a full-fledged question for 14 mark, but looking at the requirement, I was full surprised. Okay, they've asked all this, sir. Sir, usually we prepare consolidated balance sheet or we prepare consolidated P&L. Here, look at the requirement. They asked, in your consolidated balance sheet, how much will you show as trade payable? Okay, in your consolidated balance sheet, how much will you show as current asset? Like that, they have framed a question. Okay, so it is balance sheet only, consolidated balance sheet only, but asked in a different way. They've asked minority interest, which we prepare as working note number 5 and get it correct. Goodwill or capital reserve for Cool. Okay, then goodwill or capital reserve for Good Limited. But one good thing about this question is, here Best Limited, they have 80% equity shares in Cool. That means Cool is our subsidiary company. Okay, and Best also has 25% in Good Limited. So Good is our associate company. So here it's a combination question, AS21 ka plus AS23 ka combo question. Okay, so we have done them individually, that they have collated. Other than that, there's nothing new. Okay, it's a pretty straightforward same adjustment. 3 balance sheet they have given. Okay, so what to do, sir? When you prepare consolidated balance sheet, Good is an associate, no? Associate company ka assets and liability and all we don't take, right? Only holding and subsidiary company ka assets and liability are added. So when you prepare consolidated financial statements, in fact, they have not asked that because not the requirement. Okay, but just saying only these two you should consider for subsidiary ka consolidation. For associate, we show investment in associate as per equity method. That also we know the funda, no? Initially investment is shown at cost, right? We disclose goodwill or capital reserve also separately. Then match the investment ka value with associate ka performance. If associate makes profit, investment balance will increase. If associate company reports post acquisition loss, it will reduce. Investment balance will reduce. If associate company declares any dividend or pays dividend, investment in associate balance will reduce. That's the same drama that they've given. Even if you check the adjustment also, it's pretty much the same. Subsidiary company, the opening balance of reserve they've given. Okay, bills payable is all the bills payable in Cool Limited is acceptance from Best. So this only we used to call in our classes mutual owings. But hang on, they did. However, on that day, Best Limited held only 3 lakh of this acceptance. Same adjustment is there in our material and I say material also. Correct? It's the same question. So mutual owings here is only 3 lakh rupees because certain bills have been endorsed. Okay, endorsed bill and all will not be reduced. Only mutual owing portion, which is 3 lakh, which should be reduced from your consolidated balance sheet, both from a trade payable as well as trade receivable. That was adjustment. Here it's a goods sold by parent to subsidiary, I think. Okay, so 5 lakh worth of goods we sold it at 6 lakh 50,000, and they're saying entire goods remaining unsold. That's what they're saying. That means entire 1.5 lakh. 5 we sold it for 6.5. No, so 1.5 lakh rupees is your unrealized profit. Entire thing is unrealized profit, which you need to consider. Okay, so if holding company has sold this profit, means we show it under working note number 7 as a deduction. If subsidiary has sold, means who has sold? Best Limited purchased the goods from Cool. Cool is who here? Cool is a subsidiary, right? No, Cool is a subsidiary. That means subsidiary company has sold goods to the holding company. So that means who made the profit? Subsidiary company. So reduce unrealized profit from working note number 4. You remember we do analysis of profits of subsidiary company. Reduce that. Okay, like that. If you forget to reduce from working note number 4, then you can reduce separately from minority interest and working note number 7, consolidated P&L. There also you can reduce, but best to put it under working note number 4, in my view, under post-acquisition profit. That is one. We have discussed all this, right? We have done the same questions in the class. Okay, ditto. I think all this requirement also, I mean, if you solve it, ditto, you will get it. But don't, when you're doing consolidation wala data, don't look at the data of associate company. Only focus on the parent and subsidiary ka data and do the requirements accordingly. Okay, and keep in mind what they've asked and accordingly do. Trade payable. Trade payable, simply what you have to do? Trade payable, you have to do best ka, where is best trade payable? Here, holding company ka trade payable is 380, subsidiary ka is 410. Associate ka any which way we don't show. That's it. No, mutual owings. How much is mutual owings? At acceptance, right? 3 lakh, correct? That you have to eliminate. That becomes your trade payable. So if you see that, if you don't know even full answer, at least this and all is straightforward, na sir. This and all you can hardly see. This adjustment. If you do the adjustment, 1 or 2 marks you will get, right? Even if you don't have time, this at least 2-3 adjustment if you put, instead of 14 you will get 4 or 5 at least, even if you don't have time. So that's the beauty of these sort of questions. You don't have to solve them in full also, right? Same goes for your current assets also. Current assets, what do you do? Simply sum it up. We have given current assets. Yeah, holding ka you take, subsidiary ka you take, mutual owings you reduce, right? So from bills payable, current assets they've given. No? So since 3 lakh is a bills payable which you reduce from trade payable, from debtors also it will get reduced. But they have not given the breakup of debtors. They have given current assets. This is one. And do not forget to reduce the stock reserve or unrealized profit. Just 1.5 lakh. That also needs to be reduced because stock reserve you reduce from inventory. Inventory is part of current assets. So there are 2 components which you need to eliminate from stock reserve here. If you do that, you will get the answer. Minority interest, put up working note number 5, you will get it. Goodwill, working note number 6. For associate acquisition, they are asking goodwill or capital reserve. Compare cost of investment with associate share of net assets. Either you will get a goodwill or capital reserve. That is 2 minutes exercise. You can do it in your calculator only. Yes, no? Directly you can write. Then P&L account balance they are asking. P&L account balance is the working note number 7. In fact, initial problems we used to prepare working note number 7 in ledger format. Okay, then we changed it to statement. The reason is what? We can accommodate all the reserves like that. Yes. So here they've asked only what is the consolidated P&L. So only P&L adjustment you take. Like what is that? Take holding company ka P&L. Then add what? Post acquisition profit of subsidiary company. If the holding company has sold goods to subsidiary company, means there will be unrealized profit you need to eliminate, reduce that. If there is any pre-acquisition dividend, you need to reduce. That's what we used to write. Okay. And one more here probably is associate share of profit is also there. That also you need to incorporate. That will get you P&L balance, right? General reserve consolidated balance sheet they're asking. That is again pretty straightforward, right? Because associate ka and subsidiary ka reserves in surplus anyway we don't show. Only holding company ka will come. So add it up. So revenue from operation they're asking. This is a consolidated P&L adjustment. Add it. Is there any mutual owings? Yeah, one company sold goods to another. No. So there is a mutual owing. Eliminate that. Then they've asked cost of material consumed. Holding company ka, subsidiary company ka cost of material consumed data you take. And here again there will be a purchase. No. Reduce the purchase which is mutual owings. You will get the answer. So this is also pretty much doable only. Okay. Again the crux is the time. All right. So that's the reason before you start the question, see where you are and see the requirement. Okay, a few requirements are very time, I mean doesn't need much time at all, like especially the first 2, right? And maybe this last 2, they hardly require what, sir? 5 minutes. So even if you have 5 minutes, if you answer these 2 questions easily, 3 to 4 mark is in your pocket. Okay, so that's the way you need to plan. Okay, now this particular question is investment wala accounting, same thing. Okay, this is investment in equity shares. They've given some bonus, they've given some right shares. That's all, sir. Same question. I mean, hardly any adjustment. There is no extra shares purchased on a come right basis or come dividend basis, nothing. All that adjustment, they've left it off. Okay, pretty straightforward question with very, very hardly adjustments. They've put it up here for 4 marks. This is also very straightforward. Here they're saying what cost will be excluded from inventory. That also we have studied. Administrative overhead, selling and distribution overhead, storage cost of finished goods, abnormal loss. That they've asked. Okay, that's all they've asked. And this is for 4 marks, sir. Yeah, all right. Next is what? Some internal reconstruction they've asked, sir. Again, a very, very basic question. Okay, equity shareholders in lieu of their present holding, means instead of present holding, they'll receive all this. Same question again is there from our study material only. Okay, we have done, I think, 2-3 questions on like this. It's a very, very hardly any adjustment wala question. This internal reconstruction question also very straightforward. This branch wala, this is your branch question. This is also straight away from your study material. Just that probably they've changed the name and all. You just need to prepare trading P&L account. Okay, one element probably here you need to worry about is the stock reserve, right? Because branch or head office would have not sent the goods to the branch at cost price. It will be cost plus something. There will be some margin included. We need to eliminate the stock reserve. That is also one of the requirement. So again, this also is a straightforward study material question only. So overall, if you say, you could say 70 to 75 marks, right? Or I would say 80 marks also are easily manageable. If you had managed the time, or if you are able to manage that, I think scoring exemption in this paper should not be a difficult task according to me. But anyway, that time will tell. So that was your quick review. So again, don't waste time. If things have gone a little, not that good for you, if you feel some have done mistakes and all, don't worry about that. This is not the time. Concentrate on your next paper. After all the exams are over, anyway, you have 1.5 months break. That time you can do all the analysis that you want in life. Okay, people. So thanks for your time. Take care. All the very best. Bye-bye.